Hi, this is Romeo Caparassa from Tax Accounting Adelaide. I'm going to talk about some of the tax changes that are going to be happening for the 2016 tax return, just to give you a little bit of a warning on how things might change when you see me to do your tax return soon. And also I'm going to talk about what some of the new tax reforms may be. There's a lot of speculation about the upcoming budget, which is in May 2016. I'm going to have a quick talk about what some of the changes may be. Okay, let's start with the tax changes to the 2016 tax returns. We know for companies, the good news is their tax rate's going down from 30% to 28.5% for smaller businesses under $2 million turnover, and that's been effective from the 1st of July 2015. So a little bit of tax relief for companies out there. Individual taxpayers with business income who aren't incorporated business, that aren't a company, and also have turnover under $2 million will get a 5% discount on their tax, and this is capped to $1,000. So handy little thing for sole trader businesses. There's going to be the tax brackets, in particular the scale of different tax rates per bands of income haven't changed too much, but there is a change of the 37,000 to 80,000 band, which tax is increasing from 32.5% to 33%. There's been no extension to the awful budget deficit repair levy, which is, you may recall, an extra 2% tax on high income tax earners, taxable income or income earners who earn over $180,000. The only good news is this will finish 30th of June 2017. One more year to go after this tax return, so it'll also apply to 2016 and 2017 tax returns. Not a very good incentive for high income earners. The small business accelerated depreciation will continue, and that continues to the 30th of June 2017. That's you can write off immediately when you're a business items of equipment which you purchase for under $20,000 per equipment item. So don't forget, it's probably a good time now if you do need some equipment and you've got pretty high income and you can use some extra deductions. You can utilize this immediate deduction of equipment. In the 2016 tax return year, you'll only be able to claim car using two methods: the logbook method and the cents per kilometre method. And the cents per kilometre rate has been reduced to 66 cents. Fly-in, fly-out workers can now only claim the zone offset if their normal residence is within the remote area. So if you're flying in, living in Adelaide and going out to an area to work that's a remote, and you've normally claimed the zone offset, this may no longer apply to you because your residence isn't in the remote area anymore. Okay, some tax reforms. Let's look at what may happen in the next budget. Work-related deductions. So what happens to car if you use your car for work, or uniform expenses, or studying relating to your work, which you've normally been claiming now for many years. This may have an uncertain future. I think the belief out there is it's an extra complexity in the tax return, and the tax office or the politicians are looking at either abolishing work-related deductions completely, perhaps capping them, perhaps giving different occupations a cap. So there's some of the different options that may happen. I won't get to ask you all those wonderful questions. I can't see it coming in obviously as quickly as 2016 tax returns, but potentially for 2017 this may be occurring. Of course, you probably heard in the press about negative gearing's uncertain future. You know, there's a lot of talk that it can't be done, it could be done, it should be done. We're going to obviously eagerly see if that is affected in the next budget. Perhaps, you know, one of the things they may do is you may have normal other deductions, but they may exclude rental property interest as a major deduction. Or try and target the other big deduction which rental property owners may be claiming, which is depreciation on buildings. So again, I doubt that if you've got a current investment property this can be affected, but the politicians may introduce some law to stop the deductibility of some of these things in future tax returns. There may be superannuation reforms, such as transition to retirement, which is a way when you're approaching retirement age of receiving a pension from your superannuation fund at concessional tax rates, and this may be scrapped, which will be unfortunate for people approaching their retirement who haven't yet utilised the way of potentially saving tax. And there may also be changes to tax rates on high wealth self-managed super funds. We've heard this before and probably hear it again, but will GST rate be increased? I would say that at the upcoming election this would have already been leaked or talked about a little bit more if this was really on the cards, but it could be mentioned in the budget, or a broadening of the base that GST applies to, including things like health services. There's still no GST on imported goods or under $1,000 like online purchases, and last year there was talk about the Netflix tax of 10% GST supply on supplies of digital content to Australian consumers of things such as books, movies, games, apps, ebooks purchased by Australians from overseas, and they could be attracting GST. This probably hasn't happened yet, so it was mentioned last budget. Perhaps there's been a bit of a delay in actually implementing this. It's quite, I'd say, it's quite difficult for the to actually police and actually affect in Australia, but obviously it's a way of, and probably a fair way of getting some more tax out of Australians, and probably supporting local industry as well, which is probably a good thing as well. Of course, the tax office has talked about targeting multinational corporations which don't pay a lot of tax in Australia because they're clever, and so there's going to be a more focus on, I guess, this to raise more, and this is where millions of billions of tax may be raised. So I think that's a smart move and a fair one for Australians. And that's a bit of a summary of the changes about to happen to the tax return in 2016, and perhaps some of the tax reforms that were coming up in the May 2016 budget. I'll probably update you how that goes in the very near future. If there's anything we can help you with, or please contact us via our website, which is taxaccountingadelaide.com, or you can also call us on 8337 4460, and we're at 202 Gorge Road, Newton in South Australia at 5074. Thanks, I'm Romeo Caparasa from Tax Accounting Adelaide.